Welcome back to your weekly market outlook. This is for the 20th to the 24th of November 2023. So let's do a very quick recap of last week, which is, I'll be honest with you, it is quite game changing. So I think the focus would be on this inflation numbers from the US as well as the UK. Let's talk about the US number first. So we have the headline inflation, the year-on-year inflation, that has come off significantly. It was 3.7% previous month. Expectation was for a drop to 3.3%. We got 3.2%, but that's not all. The monthly changes is really significant because we typically have a monthly growth of maybe around 0.4%. Market was expecting the growth to be at 0.1%. We got exactly 0%. So there's actually no inflation growth from the previous month. The core CPI growth also dropped down from 0.3%, which has been constant for a few months, to 0.2% the previous month. So the growth is kind of slowing down a little bit for the US inflation number. Now the UK inflation number was also a surprise. Market was expecting a huge drop, and we talked about this in the previous outlook. I think the drop was too significant. It was 6.7% to 4.7%. Market got 4.6%, so it was actually a 2.1% drop. Now I think amongst the major economies, this is probably the single largest inflation drop in a period of 1 month. So the headline inflation really came off 2.1%, 6.7% to 4.6%. Now all the other numbers aside, we've got retail sales numbers that does pick up a little bit, but if we take a look at the PPI numbers from the US, we also saw signs of slowing down in terms of the producer's price, or the producer side of the inflation. That has also come down a little bit as well. The PPI month growth is also at 0%. It was a drop from 0.2%, which is very significant. We're not looking at any inflationary growth, both from the consumer side as well as the producer side as well. So I think that changes a lot. It changes a lot the market dynamics. And for now, with this kind of inflation number, we're not really expecting the FOMC to be doing anything. And I think that's where it kind of changes the dynamics of the market. I think the market is pretty happy that with this kind of inflation numbers, the FOMC will not be hiking interest rate in December. So this is definitely key, and we will take a look at that from the technical side. But there's a lot of shift that's been going on since last week. So this week, we're probably going to have it a little bit easy. We've got monetary policy minutes from the RBA as well as the FOMC. And that might give us a little bit of an insight into what they're going to be. I think for the RBA and FOMC, they are probably going to maintain their hawkish comments that they could still react to any inflation by hiking interest rates, but there should be some comments mentioning that they might not see the need to hike. So I think that's definitely the focus for this meeting minutes, which is for the RBA, which is going to be tomorrow on Tuesday. FOMC is also going to be on Tuesday, but it'll be Wednesday, depending on where you are in the region. If you're in Australia and Asia, it will be past midnight, which would fall into the Wednesday. But other than that, we are basically just looking forward to the flash manufacturing PMIs coming up from France, Germany, the Eurozone, the UK, as well as the US. That's going to be on Thursday and Friday. But that's pretty much it. Canadian numbers probably not going to create a huge impact unless you're trading the Canadian dollars itself. Okay, so let's just jump in onto the technicals when we'll make it a little bit quick. So we have seen that shift happening across all the major currencies. Take a look at the Aussie USD. Friday close was still maintaining that resistance at 65.25, but at time of recording, which is on Monday morning, we in Asia, we have surpassed that number at this point in time. So we have punched through those resistance zones. We are above the Ichimoku cloud. We are currently tracking higher, potentially towards resistance at 66 cents, where we have another order block at around 66 cents. But that's pretty much it. But we have shifted. We have transitioned back above the Ichimoku cloud. And this is the first time we have seen that since the month of August, which is pretty significant. We've got August, September, October, November. That's 4 months below the Ichimoku cloud. We have transitioned above the Ichimoku cloud last week for the Aussie USD. So right now, in terms of trajectory, I think this is more of a one-way direction. We are looking at risk sentiment returning into the market. So for now, the Aussie USD is, if you see any dips in the market, that's going to be a buying opportunity. And that's going to be the same case with the EURUSD as well. The same transitionings happen. We are back above the Ichimoku cloud last week, post that CPI numbers from the US. But again, it's also from August, September, October, November. We've been below the Ichimoku cloud. We have seen that transition. We broke through that order blocks around 1.0850 to 1.09. We have a little bit of a buy side liquidity coming through at 1.0950. But I'll be honest with you, I think the market is probably aiming for 1.11, where the resistance 1 on the weekly pivot is located, and potentially towards R2, where 1.110 is located. So we are looking for further progression to the upside. Again, key points here is that we might see dips in the market throughout the week, but as long as those dips are shallow, that's going to be buying opportunities. So just keep that in mind. We're going to be going with a buy on the dip strategy throughout the week for all these major currencies. Also, the same thing on the pound USD. We have also transitioned to the upside. We have transitioned back above the Ichimoku cloud. We have seen a little bit of a change of character in terms of the market structure, and then we have that's going to be followed by a break of structure. So we're technically within an uptrend at this point in time. The swing high and the swing low, though, it's still pretty far for the pound USD. We do have a little bit of a resistance coming in at 1.2550, but really beyond that, it's going to be 1.26 and 1.27 on the pound USD. So again, we're still going to be looking at a buy on the dip strategy at this point in time. The whole point for the pound USD is not to see it drop back down below 1.24. So if we don't see any drop below 1.24 this week, market's going to look at that and say, hey, you know what, this is a buying opportunity for the pound USD. Now the dollar Japanese yen is slightly different. This is actually in a range bound market condition. So from a technical term, this is still within an uptrend, but we're looking at a lot of losing momentum here, momentum losing out here on the dollar Japanese yen. The swing high and the swing low is pretty far in between. We got a swing low at around 149, a swing high closer to 152, and that 152 level is currently the level where a potential intervention might happen from the Ministry of Finance in Japan. Price is currently within this range at this point in time, so I'm expecting a little bit more of a range bound market condition where we actually see price bounces off maybe 149 to about 150. But if we do break below 148, then there's going to be a higher chance this is actually going to track lower for the dollar Japanese yen. And this is probably not on the back of a weak stronger Japanese yen, but this is more on the back of a weak US dollar. So that's the way we look at the dollar Japanese yen at this point in time. It's kind of in a range bound market condition. It's really hard to decide on what it is. It's not going to be a sell on any pullback kind of strategy on this one here. This one here is really flat until we actually break below 148 or move past across 152. So this one here is going to be a little bit tougher to trade. Now, for gold, we have seen that bounce happen around 1930, 1950. We are currently facing a little bit of a resistance building up. This is located about 1985 for gold. I expect this one here to be in a range bound market condition. We're probably not going to be exceeding 2000. We are also probably not going to be dropping down below 1930 at this point in time. We're probably just going to be looking at a range between 1950 to 1985. And the reason for that is that the RSI is pretty flat. That's currently between 40 and 60. And if we see the RSI around 40 and 60, we anticipate this to be a non-directional market. This is probably going to be in a range bound market condition. So just keep that in mind if you're trading gold at this point in time. In terms of the gold safe haven assets, kind of attractiveness that has been beneficial for gold the past few months, it's not there at this point in time. There's just no interest at this point in time. Now, last one, we've got oil. Take a look at oil here. Again, we have maintained a downtrend. We've got two break of structure on the US oil on the daily time frame. We have traded below that yellow orange box there below $80. So we have seen this one here progress lower. There's going to be a little bit of a swing high coming in closer to about $80. We are probably not going to reach that level right now. If you take a look at the range that we have here, we are currently within that premium zone on oil. They are likely going to be buyers lining up at, sellers lining up at around 78. So definitely keep an eye out around 78. If we see the lack of momentum in price, attempting to break 78, that could actually be a more selling opportunity right around 78. At this point in time, I think there's going to be a lot more sellers there to take this to the downside. But yeah, overall this is a clear downtrend on the US oil. It's going to be a little bit of a tough call to actually attempt a buy at this level. If you are looking for a long-term position, if you're thinking, oh yeah, we know what, winter's coming and stuff like that, you have to wait until price actually manages to close back up above $83 at this point in time. As long as it's trading below 80, it's going to be a high risk to have a long position in oil. So with that, good luck to your trades, and I'll see you soon.